Let's talk Fed rate cuts. Hey everybody, it's Amber. Welcome back to the channel. So if you're watching this video, you're probably curious around what does it mean when the Fed cuts rates and what might this mean for 2024? So if you're thinking about purchasing a home or selling a home in 2024, stick around. We're going to talk a little bit about what's being said and how it might impact your future plans for housing for 2024. So first up, what's being said right now? Well, the word on the street is that the Fed is anticipating cutting rates in 2024. There is some disagreement around when those rate cuts might happen. Some are saying it's probably going to be the latter half of 2024, the second half, so sometime in that May, June timeframe. One thing to note is the reason why the Fed cuts the rates is because they want to make access to money more favorable, because typically something bad has happened in the economy. The economy is struggling. And so as a means to encourage people to purchase, they make it cheaper to access money. So if that happens, that means typically there's been a downturn in the economy, a notable one, such that the Fed is trying to reinvigorate the economy, and therefore they're cutting the rate. When they cut the rate, that means the ability to access money is a little cheaper. So hopefully that's helpful in terms of how the Fed rate cuts and what that does to the housing market. Explains a little bit about how that reduces the typical rates on mortgages. Having said that, one thing to consider is you have, I believe, a significant amount of pent up demand. People are seeing the current mortgage rates and they're concerned because it means that their payments are going to be out of reach for them. As those mortgage interest rates start to come down or tick down, that means you're going to have more people who are introduced to the market that are interested in purchasing a home, which means there's more competition, which typically means when there's more competition, the price of the home typically goes up. So the price of the home goes up, but the payment for that home is a little bit lower, a little bit more affordable. So something to consider around what your plans are for purchasing a home in the future, or if you're planning on purchasing a home in 2024, is that you should anticipate potentially that you'll be paying a little bit less on the mortgage, but psychologically you might want to think about kind of wrapping your mind around paying a little bit more in terms of price for the home. So part of the reason why the Fed would make these types of cuts is they're trying to avoid a hard landing when it comes to the economy, trying to make sure that they don't completely just upend the housing market to where no one can afford. Then you create other problems. Those are the things that they're trying to avoid. So typically what you should expect is you're not going to see, most likely, you're not going to see extreme changes. It's not going to go from 7.5% to 5.5% overnight, right? It's going to happen slowly over time. So that way, again, the Fed's goal is to provide a soft landing, to slowly introduce the option of being able to get access to more affordably. And so with that, you will have a little bit of a window of time, I think, before things kind of start ticking up. I do anticipate, though, especially here in the North Dallas area, a lot of pent up demand, a lot of migration coming to the area. I do anticipate that you're going to a lot more activity in the market. And so just be prepared when that happens for a more competitive market, which is why I would suggest, based on what your current goals are, what your financial goals are, look at your specific situation and determine what is the best time for you to purchase. For some folks, they're doing it now because they don't have stomach for a very competitive market where there's multiple offers and overbidding and all of that. They just really don't have the stomach for it, which I totally understand. And truly right now, as of the recording of this video, we're in December. And so this is a great time just because a lot of builders, if you're thinking about new construction or inventory homes, there is a lot of incentive on inventory homes. And for resale, a lot of sellers right now, at least in this area, are working with buyers. They're doing buy downs, they're paying closing costs. They're a little more flexible on the price. So if you're someone that you don't want to necessarily have to be competing with, 40 other people on one house, now might be a good time to take a look at the market and see what's feasible for you. and then know that you can always refinance that home a little bit later when the interest rates come down. It depends on what it is, what your goals are, of course. But for some people, the way that they consider it, and I agree with approaches, the one thing when it comes to housing, the one thing that you can never change is how much you paid for the house, right? You can change the mortgage. You can change how you own the house. You can change the house itself. You can add rooms. You can upgrade the house. The housing of the two, I'll say the two things that you can never change is what you paid for the house and where the house is located. Everything else, when it comes to how you take ownership, what the loan on the house, the title on the house, those things ultimately can be changed. But what you pay for the house cannot be changed. And so while we're in this softer season of having a little bit more negotiating room to be able to negotiate, we pay for the price, that part I think is the part that folks that are keen to really making sure they can get the most bang for their bucks, they are taking the time to really understand their specific situation and determine when's the best time for them to buy. What I would recommend for you is don't wait until interest rates are more favorable to start looking. You may want to consider your situation and start looking sooner so that you're not in a situation where you're having to compete with a lot of other buyers in the market, and therefore that house price goes higher and maybe sometimes in some cases out of reach for where you want to be. Because anytime you lower the interest rate, you increase affordability and you increase competition. So as you're trying to make sense of what's going on with the Fed and what's going to be next for 2024, I think one of the things to keep in mind is take a look at your specific situation. Don't go with the masses. Everybody's situation is different. And so you want to make sure that whenever you buy or sell, that you do it at a time that makes sense for you and for your family. And again, for 2024, they're anticipating as many as 5 rate cuts. But typically that takes time. It happens over time. So don't anticipate you're going to wake up one day and the interest rates are going to be at 5%. I don't think we're going to see that. I'm pretty saying that's probably not going to be the case. It's going to be a slow kind of trajectory. And so that gives you a little bit of time to adjust. But what I would say, again, reminder is that when that does happen, you can anticipate that you're going to see more competition in the market. Anytime you reduce or increase affordability, you're going to increase demand. And when you increase demand, typically you see increase in price appreciation happening. So you want to be on the right side of that price appreciation and be able to enjoy that price appreciation. I would recommend keeping a close eye on what's going on with interest rates. Get in touch with a local realtor like myself that can help you navigate that and help you navigate your specific situation so that when you do enter the market, you do it at a time that makes sense for you, no matter what the Fed is ultimately doing. I do think that as we navigate this 2024 market, I think we're going to see a lot of different variables that enter the market in terms of increased affordability. And I think that's a good thing. But I do think it will happen slowly over time. So hopefully that helps you for this episode of the quick break at the market update or quick look at the market update. If you have any questions, please reach out. Again, real estate, remember, is very local. And so what's happening here in the DFW area might be different than other areas of folks that might be watching this video today. So if you're interested specifically in the DFW area, please reach out. I'd be happy to provide you with a little bit of insight on kind of what to expect if you're already in the area and thinking about purchasing or thinking of relocating to the area. So with that, I'm going to go ahead and let you go. Please like, subscribe, share if this information is helpful to you, and I will see you in the next video.